Welcome back to another episode of Wealth Within Reach. And today's episode is all about what worked in 2025 versus what did not work. All right. So excited to give you some end of the year reflection on the real estate side. So it can help you just have some clarity, understand what to expect moving forward into 2026. I'm going to walk through some trends on the residential side, multifamily, all the things, talk through what worked, what didn't, and what trends am I seeing that can help guide you as a landlord, as a new investor, as you move forward into 2026. So let's jump into it. We're going to start off with talking about what worked in 2025. And let me tell you who the biggest winners were in 2025. It was guess who? The buyers. The buyers won big in 2025 with the real estate market shifting officially from a seller's market to a buyer's market. Buyers this year absolutely had the leverage. They had all the cards in their hands. We seen properties sit on the market much longer than before. I think last year homes sell on the market like 19 days on average. This year, anywhere from 60 to even 80 plus days. Houses sat on the market on average, huge deals. So, what this meant for buyers is buyers were able to come in this year and negotiate. Also, buyers were able to take their time buying properties. I've seen this firsthand with my clients and also with my real estate team. So, 2021, it was situations where if you seen a house, you have to put an offer on it literally by that night. But in 2025, you had some time. If you were on vacation and you want to put an offer in on Monday, in most cases, not all cases, but in most cases, you had a little bit of time, right? And so that gave you time to make sure that you were good with the numbers, leverage your negotiations, all the things. I've had multiple clients be able to negotiate so many various things, whether it's their closing costs, to save money in their down payments. I've had clients be able to negotiate being able to use some of their down payment towards getting points paid towards their interest rate to pay their interest rates down. Even things from like HOA fees paid up front. So many things. I mean, at the end of the day, the seller had to figure out a way to get the property sold. And so we came up with some very creative ways to help buyers be able to take advantage of that. So that was a big deal. So again, seller paid closing costs, buyers won there, extra repairs being negotiated. In the past, if you sold a property, you want to do as least as possible. Now sellers are doing more money off the purchase price, off the rip. If the property's been sitting for a second, my clients, we've actually been able to negotiate properties, off the purchase price from the jump. Also, this is the big thing that has been different this year. It's been more room for contingencies. Say you were selling a house and buying a house in the past, that would make your offer less competitive. But now, if there's no other offers on the table and you need to sell your house and buy a house, and maybe you need to close in 60 days instead of 30 days, you had a lot more room to be able to, take down some deals. Even another loan program that we've seen that was more successful this year that has been in the past is renovation loans. Renovation loans typically take 45 to 60 days or more to close. In 2021, 2020, it was very, very difficult to get a renovation loan because you had one offer that can close in 30 days or even less, and then you had your offer that can close in 45 to 60 days. And guess who the seller chose? The shorter closing. But now with homes sitting on the market longer, if you have a loan that needs more time to close, you were able to negotiate that this year, which is something new that I hadn't seen. And again, more flexible terms overall. Also, something that I've seen as well is we had the whole commission thing happening last year where, agents' commissions were in question. And as a real estate agent, we were wondering, like, is commissions going to change? The cost going to change? And what we actually seen is agents who were able to be successful this year potentially could have made more in commission because sellers were even giving additional commissions for offers, for agents that brought offers for their clients. They were paying even more in commission. And that's something that you tend to see when you're in more of a buyer's market versus when you're in a seller's market. Buyers, they want big this year. More homes are on the market. There's a 17% increase of homes on the market for sale this year over last year, which explains why there's more leverage. One thing that really still hurt that didn't work for buyers is the affordability issue. A lot of buyers that wanted to buy a home sat on the sidelines. Like a large amount of buyers sat on the sidelines. We had the biggest drop in buyers than we've had in a really, really long time. And a lot of it is due to the affordability issues. We were expecting rates to come down more this year. They haven't. They come down a little bit, but not too much. They're still hovering, in the low sixes, which is still making it more difficult for some buyers to be able to afford to buy a house. And so there just simply wasn't a lot of buyers who were willing to jump into the market and buy, which a lot of that created a I'm not really ready, a very kind of like uncertain kind of market. We've seen a lot of properties also that went under contract and then the contract failed and it came back on the market. A lot of that this year, just overall, just indecisiveness. Like, even if someone who was a buyer could afford to buy a house, they were just really questioning if they should. So, a lot of that this year, which from the seller standpoint, if you sold a house this year, you had to make the house as perfect as possible because buyers were already having decision fatigue, really having a hard time making decisions. So you had to make sure that you didn't give them any excuses, or you have to price the property accordingly. And this is most markets. You still have markets like in the Northeast and places in the Midwest that still had a more competitive, balanced market where you've seen more of the, multiple offers and stuff like that, right? But for the most part, especially the markets that experience a large jump in appreciation over the last 10 years, those markets have really been cold this last year. Places like Florida, places like Phoenix or Arizona, places in Texas like Austin, and even Atlanta has been pretty warm. So definitely buyers in those markets this year have been able to really, really leverage in a big way. Let's talk about what did not work this year in 2025. Woo! And I felt this personally in Atlanta because I'm one of those cities. We had an oversupply of multifamily units. Okay, so let me tell you what that means, right? So we had during 2020, 2021, interest rates were down, housing demand was up. And so we had a large demand from housing. People were moving all over I don't know if you've seen those graphs, people just moving all over the United States. And it created this huge housing demand. And so what had happened was these developers went and built a lot of these brand new apartment complexes. And if you've ever developed anything, it takes 2 to 3 years to actually come online. And a lot can change in the real estate market in 2 to 3 years. So what happened was you had markets like Atlanta, like Dallas, and some other places where all of a sudden we have this huge influx of new multifamily apartments that have come online at the same time. Okay. But you have a demand for people moving kind of stopping because it's becoming more expensive, and just in jobs are holding back on hiring as much, and so you just have all these other things happen. So now they're like, oh shoot, I have all these apartments, I need to lease them out. So if they're having a hard time leasing them out, guess what they do? Drop the price, drop the price, drop the price. And so Now, as a renter, you have the opportunity to rent a brand new apartment with amenities and all kind of stuff for cheaper than you have in the past. And then you have like mom and pop landlords like me who have apartments in their older buildings without the amenities, without the cute stuff. And you're not going to pay as much. You're not going to pay the same $1,500 for my apartment because you can get a brand new apartment with a gym, with enclosed parking, with all the things for the same price. And that is exactly what happened. And I personally felt that in my chest. I have a building that is very close to like downtown Atlanta. And it's a 2 bedroom, 1 bathroom, multifamily building. And we were renting it out for $1,500. It's like one of those like historic buildings built in like the 30s or 40s. Really cute hardwood floors, look cute porch, in the city living kind of situation. And so we had it rented out for $1,500. But guess what? Now you can get a brand new apartment, 2 bedroom, 1 bath with amenities around the corner, right in downtown for about $1,500 to $1,600. So we realized very, very quickly that we were going to have to drop our price. And so we ended up, in order to get those units rented out, we had to drop our price to around $1,250. So that's a $250 drop in rent. And this is just a personal story. Okay. And so we definitely seen a slump in rent kind of falling for certain asset classes. Okay. And so when you hear me saying this, or you see articles and they're like, really, rents aren't falling for every single asset class, but for a multifamily and apartments, yes, they absolutely have, especially in places where there have been new more new apartments built. Okay. You do have other places in the United States that did not build as much. And so in those places, you don't see rents dropping in multifamily like you do in the other areas where there are new apartments online. And you also can look at single family homes, and single family rents haven't dropped the same as they have with multifamily, right? So that's one thing that did not work this year was multifamily rents. Whoa. No, did not work. And so the national vacancy rate for multifamilies climbed up to 7% this year, when last year was around 5. Okay, so that means that landlords are losing a little bit of cash flow, and that's a that's a big deal. And it also means that there's a greater competition for tenants. Also, that means that the caliber of tenant is lowered for people like me who have the older buildings. Okay. So one of the things that we've noticed is that the people that we have been getting have lower credit scores, have a little bit more challenging income verification versus the people who have good income, good credit that are renting. Y'all can live anywhere y'all want, and it's pretty, and you can save money. And so that's something also that's important to realize during these times. All right, man, I'm seeing rental, especially on the multifamily side. What we're seeing is concessions everywhere, people offering security deposits at $150, people offering 1 to 2 months free, whatever, waiving fees, renewal discounts. Like, these are really key things that are happening that's showing that people are trying to fill vacancies. One of the things that did work this year is that we decided that, if we had a good tenant, we wanted to renew them, and we did not want to raise their rent because we don't want you to leave. Okay. Stay. Don't go nowhere. Okay. So that did work this year. And so that's a big deal. So let's talk about the cities that had the biggest rent drops in the United States. All right. So we have Sarasota. This is in Florida. They had a rent dropped 42%, which is a lot. Providence, 19%, Minneapolis, 11%, Austin, 9%. Denver had a rent drop of 7%, Las Vegas, 8%, Raleigh, 6%, and San Antonio, 5%. All of these cities had strong new construction pipeline. And then because, like I said, new jobs were cooling, migration, people weren't moving into the cities as much. This is why this oversupply has taken place. All right. So that is what did not work in 2025. Okay, so let's talk about what 2025 really taught us. So number one, 2025 really taught us that buyers are gaining power. Okay. So it's the time to buy because of the oversupply, because of the seller concessions, the home sitting on the market longer. This is absolutely a great time to buy. If you have the financial means, if you have the right strategy, your biggest concern is just making sure that you come up with a way to ensure that the mortgage and the expenses are being paid. But it's not a question of should I buy right now. This is a great time to buy, to take advantage of having a seller pay down your interest rate, to get a lower interest rate, to lower your down payment, your overall expenses. Great time for that. Here's the really important part about this. What I've learned in 2025: landlords have had to get smarter. If you jumped into the real estate market in 2020, 2021, and maybe even 2022, you jumped in during the expansion period when prices were high, interest rates were low. You jumped in on the gravy train where it was a lot easier to do a lot of different things. But this year, 2025, it really showed who knows what they're doing and who doesn't. Landlords had to get smarter. So if you have the strategy, then you can really do some damage this year because of the deals that are happening, and then even looking forward into next year, even better deals that are coming. And so I tell people all the time, I have this framework called the investor roadmap, and it's a 5 phase roadmap, and it walks people through where they are on each phase. Whether you're a newbie, you're just getting started thinking about investing, you're a homeowner, you have your home but you're trying to figure out how to scale and how to become an investor. You're a landlord, that's the third phase. A landlord, you're in the thick of it, you're trying to figure out, how do I really make this work? You are the fourth phase is you're a freedom builder. You are work optional. You have options. And the last one is you're a builder. You have an empire. And it's just a matter of like you deciding you focus on legacy. So when you're in that third phase, the landlord phase, this is the phase where you've hustled your way to being a landlord. You've hustled your way. You've bought a couple properties. You figured it out. But now this year, I'm sure it taught you something. Okay. Your hustle will not help you sustain your investments. Now it's all about your strategy. Your strategy is what's going to keep you from one, losing money, from two, just selling your properties prematurely, and three, from burning out because you hate it, because you made a lot of decisions that probably weren't the best decisions, right? And so that's what 2025 taught us. It really is. It taught us and teaching us that you have to be smarter if you want to stay in this game long term, because real estate is it's not about just getting in, it's not about just making quick money. It's about buying and waiting, because that's when you get the biggest return on your investment, is over time. All right, so I want to know from you, what is your biggest take away from this year from a real estate standpoint? What was your biggest lesson from 2025? What worked for you? What didn't work for you? Let me know in the comments. And I want to invite you to make sure you subscribe. I'm excited to next week. I'm going to share some of my predictions coming up and all that kind of stuff about 2026. So be sure you come back, you listen, you share, you subscribe, and I will talk to you next time. Bye.